As we are nearing the end of the week, we have a look at what next week has in store for the markets. On the monetary front, we had the release from Canada of BOC's interest rate decision on Wednesday. As with financial releases, on Monday we get Australia's building approvals for July, China's Caixin manufacturing PMI figure for August, and Germany's final manufacturing PMI figure for the same month on Tuesday. We get Australia's current account balance for Q2, Switzerland's and Turkey's CPI rates, Canada's manufacturing PMI figure, and from the US, the ISM manufacturing PMI figure, all being for August. On Wednesday, we get Australia's GDP rates for Q2, Eurozone's final composite PMI, and UK services PMI figure, both being for August, Canada's trade data, the US factory orders, and the US job openings figure, all being for July. On Thursday, we make a start with Australia's trade data for July, Germany's industrial orders for the same month, the US ADP national employment figure for August, and the ISM non-manufacturing PMI figure also for August. On Friday, we get Japan's all household spending for July, Germany's industrial output also for July, UK's Halifax house prices for August, Eurozone's revised GDP rate for Q2, and we highlight the release of the US employment report for August and note Canada's employment data for the same month. As for the USD, we make a start by noting that as these lines are written, July's core PCE rates are still to be released and could have a substantial impact on the greenback. On the monetary front, we know that Fed Chairman Powell's speech at the Jackson Hole Economic Symposium sent some dovish signals, enhancing the market's expectations for extensive rate cuts by the Fed in the coming months. On a fundamental level, the pre-election period is intense as the battle between Trump and Harris is ongoing, with the Democratic candidate seemingly being able to widen the lead against Trump. Also, we note the visit of US National Security Advisor Sullivan in China, and a possible de-escalation of the tensions in the US-China relationships could cause the greenback to experience some safe haven outflows. On a macroeconomic level, we note that the revised GDP rate for Q2 accelerated if compared to the preliminary one. The release tended to enhance the Fed's narrative for a possible soft landing and in turn may provide more confidence for the US economic outlook. In the coming week, we highlight the release of the US employment report for August with its non-farm payrolls figure. The NFP figure is expected to rise from 114K in July to 163K, and the unemployment rate to tick down to 4.2%. Should the actual rates and figures meet their respective forecasts, we may see the USD getting some support, as the indicators would imply a possible tightening of the US employment market. Please note that Fed Chairman Powell, in his speech at the Jackson Hole Economic Symposium, mentioned the shift in the bank's attention from curbing inflationary pressures on the weakening US labor market, which in turn could enhance the impact of the release. For pound traders, we note that at a fundamental level, Keir Starmer warned that his government's October budget statement will be painful and asked the nation to accept short-term pain for longer-term good, as reported by Bloomberg. The possibility of a tighter fiscal policy, though, failed to substantially weaken the pound. The markets seem to be trusting no drama Starmer and are willing to tolerate some pain in the UK fiscal policy for longer-term profits, given also that the idea agrees with orthodox economics. At the same time, the UK PM seems to be seeking for a closer relationship between the UK and the EU, and any improvement in the EU-UK relationships could prove to be beneficial for the pound on a fundamental level. On the monetary policy front, we note that BOE Governor Bailey stated at the Jackson Hole Symposium that inflation-related risk is diminishing and is cautiously optimistic for the issue, yet it's too early to declare victory as per the Financial Times. Overall, the comments seem to be a prelude for further easing of monetary policy. For the time being, the market seems to be pricing in a rate cut, not in September but in November, and another one in December. On a macroeconomic level, there are no major financial releases in the coming week, hence we tend to expect fundamentals to provide direction for the pound. BOJ's monetary policy may be the main driver behind JPY's movement in the past few days. On the one hand, the market's expectations for another rate hike by BOJ seem to remain strong, as it almost fully prices in a rate hike in the September meeting, and marginally another one in the December meeting. Please note that Bank of Japan Deputy Governor Ryotsu Himino expressed the bank's readiness to raise interest rates should inflation remain at high levels. Please note that the July headline rate accelerated, while Tokyo CPI rates for August are also noted. Overall inflationary pressures seem to remain present in the Japanese economy that could justify further hikes by BOJ. On the other hand, we note that JPY has reached sufficiently high levels against the USD, and BOJ may prefer some FX stability for the yen, thus maintain rates at current levels. Should we see further indications that the Japanese central bank is about to hike rates in its coming meeting, we may see the yen gaining further ground. On the flip side, should carry trade be rejuvenated with the yen on the short side, we may see JPY retreating. No major financial releases are on the calendar for Japan next week, hence we may see fundamentals leading the way for the JPY. Also, let's not forget JPY's dual nature as a safe haven and a national currency. And should we see a more risk-averse market sentiment, we may see JPY getting some support. For the common currency on the monetary front, we note the market's expectations for the ECB to start cutting rates in its next meeting in September and deliver another 2 rate cuts, one in October and one in December. We note that ECB's chief economist Lane stated that the bank expects wage growth to ease considerably in the coming year. The statement is practically enhancing the possibility of an easing of inflationary pressures in the Eurozone as wages are a key driver for inflation. On a monetary level, we expect the common currency to continue to weaken as interest rate differentials may widen between ECB refinancing rate and the rates of other major central banks. Even should other central banks cut rates according to the market's expectations, the rates of the ECB are to be the lowest rates among major central banks, thus weighing on the euro. On a macro level, we note that the easing of inflationary pressures in the area as a preliminary release for August, which tends to weigh on the euro and may enhance the possibility for more rate cuts by the ECB. In the coming week, we highlight the release of Eurozone's revised GDP rate for Q2, and a possible acceleration of the rate could support the euro as it would be easing the worries for a possible recession and vice versa. Also, please note the release of Germany's industrial output and orders for July as an indication of economic activity for the crucial manufacturing sector of Germany. On a fundamental level for Aussie traders, we note the possibility of an improvement of the US-China relationships given the visit of US National Security Advisor Jake Sullivan in China. Discussions are expected to be conducted about the Middle East and Ukraine, Taiwan and fentanyl. On the other hand, the Chinese are expected to express disapproval over US tariffs on Chinese products and try to reaffirm their control over Taiwan. Should the negotiations fail to produce a positive outcome, market worries could intensify, which could weigh on the Aussie, given the close economic ties of Australia and China. From China, we also note the release of the NBS and the Caixin manufacturing PMI figures for August. Should the indicators show that Chinese factories are still struggling to keep economic activity afloat, that could weigh on the Aussie, as another deeper contraction of economic activity in China could imply less exports of Australian raw materials to China. On a deeper fundamental level, we note the market's perception for the Aussie as a riskier asset given its commodity currency nature. Should the market sentiment turn more risk averse, we may see an adverse effect on the Aussie. On a macroeconomic level, we note the easing of inflationary pressures in the Australian economy for July, yet the rates are still at high levels, which in turn may force RBA to maintain a tight monetary policy. Such a scenario could keep the Aussie supported on a monetary level, as RBA seems prepared to keep rates at high levels in a time that other central banks are easing or are considering easing their monetary policy by lowering rates. We make a start for the loonie with fundamentals noting that the lockout of workers at Canadian railways came to an end rather early. On a deeper fundamental level, we note the wild swing of oil prices in the past week, given the status of the Canadian economy as a major oil producer. Fundamentals regarding the oil market tend to include the oil outage in Libya and the developments in the Israeli-Palestinian conflict. Should we see tensions in these two cases rising, we may see market worries for the supply chains of the international oil market intensifying and thus providing support for oil prices, which could be overspilled towards supporting the loonie as well. On a monetary level, we highlight the release of BOC's interest rate decision next Wednesday. The market expects the bank to cut rates by 25 basis points and lower interest rates from 4.5% to 4.25%. It's characteristic that currently cut OIS imply a probability of 97% for such a scenario to materialize. Yet, the market is also expecting another 2 rate cuts in the October and December meetings. Given that the rate cut is already almost fully priced in, should the bank cut rates as expected, it may keep the loonie untouched and the market's focus turn towards the bank's forward guidance. Should the bank signal its readiness to cut rates further in the coming meetings, we may see the loonie losing ground as the market's dovish expectations may be verified at least partially. As a closing comment, we expect the US dollar to gain more of the initiative in the FX market near the end of next week as the release of the US employment report for August will be nearing. As for US stock markets, we note that the earnings season is slowly calming down, easing the interest of market participants for the US equities markets. The bullishness of US stock markets seems to have eased as we get mixed signals from major US stock market indexes. Also, Nvidia's earnings report, despite showing improved and better than expected revenue and EPS figures, the company's forward guidance tended to disappoint the markets. The release was reported having an adverse effect on the share's price in the aftermarket hours. Should the markets in the coming week have a more cautious approach, we may see it having an adverse effect on US stock markets and vice versa. As for gold's price, we note that the negative correlation of the precious metals price with the USD remains somewhat blurred in the past few days, despite a slight strengthening of the US dollar, mostly due to the acceleration of the US revised GDP rate for Q2. Gold's price failed to weaken substantially. We also note the mixed signals sent by US yields that dropped for short-term bonds, such as the 2-year one, yet rose for longer-term bonds like the 10-year one. Overall, we see signs of the negative correlation between the pre-mentioned trading instruments slowly reviving. Hence, should we see the USD gaining some ground in the coming week, it could weigh on gold's price. We hope that you found this report useful, and from all of us here at IronFX, best wishes for solid trading.
All right, I bet you guys can see my screen clearly right now. All right, let's start today's advanced stochastics oscillator strategy. Okay, let's take a look. This is my profile. You guys can just be open and also type in the chat box. So we are looking at today's agenda. So we have an introduction of stochastics oscillator. We also have the best settings used for stochastics, and thirdly we have the secret strategies that institutions actually use and look at, and lastly we will be using stochastic oscillators to actually identify divergence. So what exactly is a stochastic oscillator? So some of the background of stochastic oscillator is that it's actually a popular momentum indicator developed in the late 1950s by George Lane. All right, we are also looking at it to be comparing the security's closing price relatively to its price range given or over a period of time. Sounds relatively close to moving average, but slightly different. All right, the oscillator does not follow the price and it does not follow the volume, but rather follows the speed or the momentum of the price. So that's one point that is very, very different from moving average. So we have a graph right here saying, seeing a stochastic indicator. You can see the bottom red color curvy line is actually how it would look like, how the stochastic indicator will look like to in comparison with the chart above, which is your regular trading chart, right? So we are looking at its formula stating that percentage K equals to current close minus lowest low divided by highest high minus lowest low times 100. All right. We are also looking at, so stochastics has two components. You will have percentage K and percentage D, which is shown in the bottom figure. So because the fast percentage K can be choppy, we will be smoothing it by applying X period moving average. All right, therefore finding ourselves with a slow percentage K. And then to get the signal line, we smooth the data further by applying another X period moving average to slow percentage K. And now we have percentage D. So now we will be, in whole stochastics, we will be seeing two visible lines, which are the slow percentage K and the slow percentage D, which we see right here in the figure. So right in the figure, you can see the green wavy lines are your percentage D, K, and our dotted lines are actually our percentage D. So the best settings, or rather the default normal settings for stochastics used are normally 5,3,3. So you'll be seeing that these numbers will appear on the settings of the stochastics indicator when you are using any form of trading chart website, trading chart app. All right, so readings are more than 80 will indicate the price is near its high, and readings that are above 20. So readings that are smaller than 20 indicates that the prices are near the lows. So we have an upper bound and a lower bound kind of range thing. So we are looking at percentage 80 and 20. All right, the security that is overbought when percentage K moves above 80, and security is normally oversold when percentage K line moves below 20. I think it'll be more graphical once you get to see it. So we will look at it in a while. So some of the secret strategies that institutions use, or sometimes I do showcase in some of the webinars that we have had where I use stochastics as the indicator, will actually include the uncertainties of their estimates and analyzing how portfolio performs during a volatile and uncertain market. So we are looking at something that is called the hidden support and the resistance. So backtrack a little bit, we are looking at basically on this slide, we are saying that we are looking at highs that are 80 and lows that are about 20. So we are looking at these two as resistance and support. However, if you are looking at how the price reacts and the momentum it carries in the stochastic indicator, you can see that on these four red color highlighted areas, or rather price and reactions, are the peaks of the reaction, right? So we can see at the peak of the reaction, we are seeing that actually at the peak, we are looking at 93.52, way above than our normal range that we're looking at 80. So in this case, if you are stopping yourself or letting go of your buy in and letting go the price where it hits 80, in the range, that would be ignoring hidden resistance that are actually like 93.52, or it would cut short your own profit that you could have possibly made, right? So in this case, we can see that the 1, 2, 3, 4 touch points on the peaks of the graph. All right, so on the 4 touch points, they are all in line and forming a new hidden resistance of 93.52. So we are also looking at the actual chart of dollar franc in H1 time frame. We can see that it's a very nice upward sloping trend. We can also see that these touch points, I would need my pen. You can see that these touch points could also relate to the chart right now. Right, so we are seeing that these few touch point that bounces off or bounces off the upward trend line are also bouncing off your invisible support, which is at 4.2675, which is way below our 20 mark that we are looking at before. So you can see that. Let me just clear the drawings. Okay, so we can see that in this case, we can mark this 4.2675 as a support in our resistance. And in this case, we can see that over here, we are looking at a potential push up and stochastics, which also means that there is a likelihood of support that has been bounced off on the stochastics indicator. Okay, so this is what we are looking at identifying divergence. Sorry. In this case, oops, sorry. So for those that are familiar with divergence, I think that this slide will be much easier for you guys. But however, those that are not familiar with it, you can look at, first of all, we have a upward looking trend with higher highs, higher lows, and downward moving trend with lower highs and lower lows. So we can also see in this case that stochastic, how can they identify in terms of divergence, right? So in the first few slides you'll be seeing, we did mention that stochastic is actually looking through pricing momentum, right? So you can see that in this case, it did reach the peak beforehand. However, there was a slight increase in the price point. You can see that price actually closed off higher than before. However, in stochastics, they can capture a lower momentum, which is really odd, right? Since the price actually did close higher than before, which is also an indication of a divergence, which in this case, we call it a bearish divergence. So in this case, after the bearish divergence, price indeed went all the way down to this level. So we can see that this also coincides with our hidden resistance level, which adds on to the divergence theory that we are looking at. And then we do see the support here. This is not in the slide, but you guys can also see it as well. So, and then price did bounce off the stochastic support that we're looking at, and also the pricing support that is also available over here, and did move all the way up. And then we are also capturing another bearish divergence at a higher price. So we can see that repeated pattern on the hidden resistance level of 94.98, and also a bearish divergence at the peak. In this case, you can see that indeed the bearish divergence carried over and price did slow down and dropped from the stochastics hidden resistance level, coinciding with our bearish divergence. All right, so that's pretty much it for stochastics indicators. I know that I did go through a slightly quicker. If you guys have any questions, do let me know what kind of questions you have. You have some time to key in the questions before we go into a live analysis. Okay, I see that there are no questions. Then I will be sharing my screen right now to the chart. Okay, do let me know if you can see my screen. Oops, sorry. Oops, sorry. I'm losing the chat box. Okay, you guys can also key in your Q&A or in the chat box. If the chat box is not working, do use the Q&A, all right? So let's go through some of our regular pairs that we go through in webinars. I mean, we can go through any requested pairs as well. That would be great. So maybe let's just start off with dollar franc. Let's take a look at the weekly chart. Hopefully you'll be able to use stochastics in this case as well. So we are seeing a overlap, support and resistance overlap. We are also seeing a key resistance level over here. We'll take the first closing price as well. So it'll be 1.00153. We're currently looking at a dollar franc weekly chart. All right. So let's look at daily. We can see that for now, we are looking on terms of the daily, we are seeing that price is actually moving in between these two price. So we're looking at 0.93 and 1.001. So this is a not, in terms of the daily chart, is not super trending. We are looking at a sideways moving kind of trend. However, if you take a closer look in the H4, you can see that it's moving down slightly. We are looking at a potential channel, I believe. Let's try it out. Yep, we are looking at a downward moving channel. A bearish channel in this case. However, I would say that currently price is right smack kind of in the middle of the channel. A bit unsure. The market is a bit unsure of its goings, and we can see the price do react a fair bit on this level of resistance at this price of 0.94312. All right, this is something that for those that are carrying on with a dollar franc trade is a price point that you guys have to take note. It does seem like the price has difficulty bouncing all the way up to the resistance that we have at this level. However, I think we do have to take a closer look on where it's going. It looks like on the H4, it is still moving a sideways with a underlying bearish momentum. Let's look at another pair. Maybe Aussie dollar. Okay, let's start from the weekly chart. Initially was a downward moving, maybe it's a channel. Hold on. Yeah, it was a downward moving channel, but you can see the price has broke out of the channel. For Aussie dollar, let's look at 1-day chart. Very obvious, very nice channel. On the 1-day chart, you can see the very prominent upward rising trend. Not a very nice trend line, so we'll leave it. Try to see whether is there any highs or lows that we can take note of. As of now, not much. Let's look at H4. Okay, so we are seeing a upward moving channel. Okay, so it has just dropped out of the bullish channel that we have just drawn. Has a momentum to go down. However, I would say that there is some area of moving downwards. However, I am seeing a bounce off in this area of support. All right, so I wouldn't say it's a very big movement. I would say do keep in view for this as well. So we can see that some price did have a difficulty pushing higher than 0.68. All right, so weird today. Today's FX pair seems a little bit odd. Let's do silver then. Okay, for silver, very obvious levels here in terms of support. Looks like it's an upward momentum for now. Let's look at daily. So on the daily, there's a upward moving trend line. Not a channel, but upward moving. So we are also looking at a potential support turn resistance price point over here. Looking at H4. Let me just redraw the trend line. Instead of a trend line on H4, it looks like a channel. Yeah. So in my viewpoint, I would choose to remove this. I am seeing another level over here instead. Seeing a upward movement bounce off. And I would like to keep my stop loss slightly closer. Okay, let's use our Fibonacci retracement. So we are looking at a potential bounce off in this area. Let's use our projection. Drawn wrongly. Okay, so 127.2 coincide with our retracement. Let's take a look at our potential take profit. Looking just nice at the candlewick range. Take a look at stochastics. So you can see that in this case, let me show the setting. The blue is percentage K and D is percentage D. And then we are looking at possible support levels. Resistance level. All right, so there's a chance where we can see a bounce up from here. Sorry, the support can be slightly lower. Right, so we are seeing that there's a chance where price will drop slightly a bit more and then we will bounce all the way up to our take profit. However, you can see that I'm paying out the resistance to be 96.21 and support to be 56.1. All right, this is what I am looking at right now. Sorry. Okay, I am looking at this as well, Ichimoku cloud. The way the lagging and span. So you can see that there's a chance where price is actually above the cloud and we are indicating a upward movement momentum. All right, this is our silver for today. Is there any divergence per se? I would say no, there's no divergence, peak and drop. So it's very natural, very coinciding with the price and the movement. All right, this is silver for today. Let's hold on. Okay, I think it's fine now. Let's look at gold. Very obvious support here. Previously was on a downward movement. Possible support and resistance blockage. So it's a support to and resistance moment. Let's look at the daily. Nothing much to be captured here. Let's look at H4. Well, there is something that I'm seeing a slight upward moving momentum for gold in terms of channel. We can see that there is a support and resistance level here as well. You can see that price did double twin top. Price is already heading for the support, in this case in stochastics. All right, so there's a chance where price would bounce off from this overlap that we are looking at. So in this case, I'm actually personally also thinking that maybe you should go for this. And then this one, in this case, I would and could put according to Fibonacci projection for our stop loss. Our 78.6 Fibonacci projection is also nicely in line with our buy entry. You could keep your stop loss higher if you want to. However, I think it would be just nice as it's slightly below the channel, and it will show a lot of indication if it really exceeds that level in price. Price is also holding above our cloud. Okay, this is my take. Let me just add in a retracement. 61.8 as well. This is what I'm looking for, gold. All right, as of now, do we have any questions? I guess not. Let's continue moving. Let's do Kiwi dollar. Like a very nice downtrend on a big time. Let's hide Ichimoku for a while. There's a relatively flat downtrend that we are seeing. Some form of resistance over here. completes a V-shaped recovery. Let's look at H4. Depending on how you want to draw, I would like to draw closer to current prices. This is what we are looking at, the upward trend on H4. We are also seeing a indication of support here. So many touch points for this. I would say this could go both ways in terms of moving towards a resistance on the bigger time frame, like on the weekly, the price actually move past that and move towards the bigger resistance of the downward channel. However, the smaller time frame, we are looking at a short-term upward movement. There is a chance that this is a Nike tick reaction in terms of this that we are seeing. So let's take a look. Similarly, like a Nike tick reaction, however, it has been played out back to here. So we are looking at this retracement with 38. Yeah, about there. Okay, so I would assume that if we ignore this historical resistance, let's just say, in this case on H4, it is here. It goes way back. Okay, then I will be looking at a probable upward movement. Sorry, my screen just went black. Hold on. Okay. We're looking at 100 at the bounce off point. One, 272 to be a stop loss. Let's take a look at Ichimoku cloud. Price holding up nicely above the Ichimoku cloud. Let's look at stochastics. We can see that stochastics indeed has reached the bottom. Looking at a very nice support line, very high chance of it bouncing all the way up. Okay, so we are looking at this bounce up and we are also identifying resistance over here. We can see that actually the real support for this resistance for Kiwi dollar is actually 12.88 instead of our 20. All right, this is what we are seeing for Kiwi dollar. Okay, let's move on to the next pair. Let's do unusual pairs like Aussie Kiwi. Let's do it on the weekly basis with an upcoming support here. Strong decline from the resistance here. Okay, let's look at daily. We can see a very, very strong down. So look at H4. I would say even though it is a downtrend, it is looking at a possibility of short-term recovery, short-term retracement. Let's take out stochastics first because I want to see, is there any chance of divergence? No chance of divergence. We are still looking at a downward sloping even on the stochastics and a lot of close support levels. However, I do see that there's a chance for a small bounce up. However, I don't think it is worth the risk. Okay, anyone doing Kiwi Aussie Kiwi in the chat room? I guess in this case, we do not have any. So maybe let's just skip the pair. Let's do Frank Yen. Interesting. We're looking at resistance and support level. Let's look at daily. You can see that actually price is moving up and down between these two levels. H4. Very obvious. The nearest resistance we are looking at is here. Sorry. 148.757. There's a chance that price is actually making a V-shaped recovery back up. It was before that a downward moving. There's a chance that the price would exhaust in a while. And there could be a way better entry. So let's just take a look. It is indeed true that price has reached its resistance. Is something to be aware of. All right. So there's a chance that the burst of the bounce from the support of 142.986 has been exhausted. So I would say that it would be better if we take a precaution on coming back for the testing and bounce up again. So my opinion is that if there's a chance that it drops back down, we could go in from here and taking profit at here. So we're looking at a 38.2% drop back, looking at a 50% stop loss. All right, so this is what we are looking at. Let's see whether our Ichimoku cloud can give us some more information. Yet it did seem like a downward moving for this one. So Ichimoku cloud is slightly lagging as well. So we do have to see whether the price exceeds the cloud of actually come back down under. All right, so this analysis is something to be observed. I would say that we have to wait for the price to react to this current stage first before we could decide on any direction. Okay, let's look at another pair. Dollar CAD it is. No particular channel or anything, but there is a upward moving slope. So daily slope seems to be slowing down a little bit. Previously, it looks like it has had a head and shoulder pattern kind of things. Yep, did react up to it a little bit and then picked up the momentum again. Looking at a potential support over here. Let's look at H4. There's a upward moving channel. There's a chance that it would have dropped down with the exhaustion of the stochastics as well. Yep, very high in resistance level already. I'm looking at a potential downward movement. Would still want to keep my price within, as in my take profit within the channel. So I would put it slightly above and on the dot of the support, the resist of the channel, and my stop loss just right below as the support as well. All right, let's take a look. One, 100% for take profit, and we're looking at 127.2 for stop loss. Let's take a look right now for entry. 100% for entry as well. Very nice triangles. Yep, that's about it for dollar CAD. Do we have any questions? Okay, I guess not. Let's look at yen. Upward moving as well, resistance here as well. Let's look at daily. Let's change this to red. H4. Interesting. I think on the H1 you'll see a slight triangle. So on H1, you'll be looking at this instead. Let's just do a small analysis on H1. Interesting. Looks like it's more of a downfall for the short term. And it is stopped a bounce up over here. Cat yen is pretty odd. Let's look at H4 instead. H4, you can clearly see that price has not reached its full potential in terms of resistance. Still trying to climb upwards. I'll say for the short time being, it will be pretty hard. However, if you're looking at a longer time period, you could see that there is a chance of bouncing up. However, it's not a very big entry. I would say the risk is not very worth it. Yeah. So in order to keep our take profit within the channel, we will be looking at more of the 1:1 in terms of stop loss and take profit, which I am not a very big fan of. Okay, we'll do one last one. All right. Let me think. Let's just do the XY. On the weekly chart. Upward moving as well, strong downturn after. Let's look at daily. So recently we're looking at a down drop. Let's look at H4. Yep, so looking at a downward fall for recent timings. Short-term downward, we can look at long-term upward, but let's do the downward first. I'm going in line with the trend line instead. Let's use our Fibonacci projection. 100% for the drop. Looking at 161.8 for a stop loss. %100% for the take profit as well. We are also looking at Ichimoku cloud in terms of price is below the clouds. We can also see that stochastics right now is at the resistance. We are highly likely pending for a drop. Very beautiful resistance for this case. This is what I am looking at for the XY seems to be an impeccable drop coming, I believe. Yep, I think that's all for today. Since you guys don't really have any questions, I will be seeing you guys next time. All right, goodbye.